Let's be honest here, like 100x sounds crazy. To the normal person, when you say that you can turn $1,000 into $100,000 in 2 years, they're probably like, yo, you're tripping. You sound like a scam. It doesn't make sense. But last video, in this video series, I actually proved it. I proved that there's been multiple 100x's. Not one, not two, not 10, but like 50 to 100 of them. There's been coins that have 100x in price in cryptocurrency. I talked about the first mover advantage and why it's so strategic to be involved with a new emerging asset class. And I essentially made the case why cryptocurrency is the best form of investment in the world. There's nothing that even compares when it comes to spending an hour of your time. There's literally nothing else that would get you a bigger reward than understanding the cryptocurrency market. Last video, I left you off on this slide right here. Seek the market trend. I'm going to dive a little bit deeper into the market trend. I gave you undeniable proof last time on the market trend and how I believe we're in a bull market, at least until 2025. We might have a major dip, but right now, we are in a bull market. I specifically said that. I gave you a couple reasons why. Now, I want to finish that by blowing your mind with a chart that you cannot find anywhere else on the internet. This is proprietary information that I created myself that looks at the Federal Reserve in a detail that you would never see before. And it gives you a very clear answer if we're in a bull market or a bear market. This actually works for stocks and pretty much every investment asset class in the world. And when I break it down for you and you realize how simple and how accurate, 100% accuracy this chart is, you're going to realize that a lot of people are in deception. You're going to realize a lot of people, analysts, they do way too much. Simple is better. And it's going to be so clear that it's going to give you so much confidence to want to invest because it's very clear. It's happened since 2000. For the past 23 years, the same cycle has been repeating, not just in crypto, but in all asset classes. So I want to break down the Federal Reserve and their playbook and everything they did since the years 2000 and how it affected asset prices. And then I'm going to break down the Bitcoin halving cycle and how both of them are essentially lining up to catapult cryptocurrency into an all-out bull market. And then I'm going to dive, like I said before, on the protocol technology level and dissect the future of cryptocurrency, the technology that will likely be used, the winner technology where the 100x altcoins are actually going to be. Yes, I am diving extremely deep and I'm using this right here. Seek the market trend, monitor liquidity. So where's the money actually going? And once we find where the money is actually going, then we jump into altcoin fundamental analysis, picking the 100x altcoins. I already picked the altcoin. If you guys want to know what I bought, I went 50% of all of my entire portfolio into this altcoin. That's how aggressively confident I am. Head on over to CoinPix Inner Circle. We have 7-figure earners, 8-figure earners, and I've been teaching people cryptocurrency literally for the past 3 years. This is a time-tested, battle-tested community that has an entire digital course from beginner to expert. And if you know a lot about crypto, I'm willing to bet there's some things in there that you do not know. And the reason I say that is because you probably don't know what I do specifically. I have actual trading strategies that can get you anywhere from 7 to 10% a month consistently over a long period of time. And I proved that last video. I've been in multiple 100x's and we have 480 written testimonials with results on the website. Let me say it again, 480. We call it the wall results. It literally, if you download it, it takes like 20 minutes to download because there's 480 slides. Now, that's all the written ones. We have way more results that we missed. Trust me. So I've been in this market for 3 years and I've been educating people on a consistent basis. I know what people do wrong. I know what people do right. I know why people win and I know why people don't. And so what I actually did is I took all of my experience in the past 8 years of being in this crypto market, going through 2 cycles, making every mistake in the book. And I essentially give you all of the mistakes so that you don't make the same. Okay. Some people actually pay off the course with a couple of trades. Obviously it's not financial advice, but you get my buy and sell calls. You get the entire community as well as the digital course. Also, I just want to let you guys know it's on a revolutionary new platform called School, where your engagement, you can actually rank up. And if you rank up enough, you can actually get the course for free for a year. So that's thousands of dollars worth of savings. And right now it's actually 50% off. Let me say it again. It's 50% off, which is more thousands of dollars worth of savings. And when this video series, this is a series that I'm making, they all work in conjunction together to analyze the market in extreme depth. This presentation is 250 slides, which is going to be in CoinPix Inner Circle. When the series is done, the discount will be over. The 50% discount will be over. So get in there as quickly as possible, get this presentation and get the altcoin that I actually purchased because I don't know when I'm going to finish the series. I have to break everything down, okay? And if you're new here, do me a favor, like the video, subscribe to the channel. My name is Alex. We talk about crypto, and I believe I'm the greatest cryptocurrency researcher in all of the internet. Not to compare, but I do believe that. I do believe I provide the deepest evidence out of anyone, and I want to show you that today. If you haven't watched my last video, for sure, watch the last video. Very, very important because it goes with this video. Even though you can watch this one alone, the last one will really set you up for success on this one. So I left you guys here, seek the market trend. What I want to do is dive a little bit deeper. I don't believe I convinced you guys enough on the market trend. So the first thing I want to do is look at the S&P 500. Now, the S&P 500 is an index of stocks. So it's essentially the biggest index in all of the stock market. This is basically the stock market. If you were to put a price on the stock market, the S&P 500 is most likely to be used. Now, what I did, you can see the color coordination. What I did is I took the Federal Reserve and every decision they made on policy for interest rates. You guys know what that is. Hopefully you know. Hawkish is where they take money out of the system, and dovish is when they print money, right? You know, everybody talks about the money printer going burr. So that's the actual policy, right? That's what they do for interest rates. They either increase interest rates or they lower interest rates. When they lower interest rates, that's equivalent to printing. When they increase, that's equivalent to vacuuming money out of the system. I literally took every decision they have ever made all the way back to the year 2000, and I color-coded it on the S&P 500. Now, you're probably asking the question, Alex, why did you color-code it on the S&P 500 and not Bitcoin? Well, Bitcoin is not this old. You can't get a price history that far back. Not only that, but if you look at the correlation of the S&P 500 to Bitcoin, it's almost identical. They're both considered risk on assets or assets that are risky. They're both considered risk on assets, and they move. The tops and bottoms are very, very, very similar. Very similar. So to me, when the S&P 500 is going up in price and stocks are going up in price, cryptocurrency will as well. And it's been very consistent through the board. Now, if we look at this chart, there's a couple of things I want you guys to notice, right? We have these big, big falls, right? Look at this big fall here. You don't want to be holding stocks this year, right? You don't want to be holding stocks this year. You definitely don't want to be holding stocks this year. Now, if you notice, there's always red. Look, notice every single time there's red. Now, the darker the red is, the more they actually decrease interest rates. Now, let me explain for the people that might not understand this. Decreasing interest rates is equivalent to printing money. It's actually the exact opposite of what everybody says on the internet. Everybody's like, oh, when they start printing money, we're going to go into a bull run. That's true, but initially, typically the market falls very aggressively, even for maybe a year before we go into a bull run. So the white is when they actually kept interest rates at zero. So they were at zero for a long period of time. They did nothing, they just kept it at zero, meaning the cost of borrowing money is zero. So basically how the system works is the Federal Reserve controls the biggest superpower on the face of the planet. That they control pretty much everything because this is the most important variable of all modern economics. The United States dollar is the biggest world reserve currency in the world, and every country is essentially subject to the United States dollar because of its dominant power. Then we have one entity called the Federal Reserve that essentially controls the printing or vacuuming of the money at will. As a private organization, they can do whatever they want, whenever they want. It's ridiculous. So essentially what happens is, again, they vacuum money out of the system. So a lot of people say that, you know, you're going to stop printing money. No, it's either they're printing money or they're vacuuming money out. So they're technically taking money out of the system. So when they increase interest rates, when the interest rates go up, then it's more expensive because it's higher interest rate, right? So when the interest rates go up, it's more expensive to borrow money. Institutions and banks don't want to borrow money when the interest rates are high. When the interest rates go low, then institutions want to borrow as much money as they possibly can. This is where you get the printing and the not printing. It's really just a whole bunch of borrowing. It's not actual printing. It's just numbers in a computer. So essentially what we see here, I'm going to say it again. I want to try to really explain this to you because this is super important. What we see here is that every single time, okay, every single time they lower interest rates. The red is lower at printing money. As you can see here, the red is when they print money. When they print money, the market falls. And if you look at it, it's almost on the head. So right here, when they kept interest rates the same, right? That's what the yellow is. The white is when they kept the interest the same, but they kept it zero. So I actually made the white one specific and unique to itself because interest rates at zero is crazy. It's like basically free to borrow money, essentially. And then you have the green, which is where they're actually taking money out of the supply or vacuuming money out. Notice, again, every single time we have red, I'm going to say it again, every single time we have printing of money, which is the exact opposite of every narrative on social media. This is why you don't follow social media for your investment advice and you get structured strategies. This is very important. Every single time they print money, we had a market fall. Like you could even see it right here. Look at this market fall. Almost on the day. On the day we started printing, market fall. Now look at this one. Before it even predicted COVID. Look at this one. We had a printing and then a couple months later, the market fell. The market fell. So what does that tell you? Well, it tells you that if they're not printing, if they're still taking money out of the system, if they're still green, which look how aggressively green they are right now, extremely aggressively green. If they're still green, then that means that the market's not going to fall. And I want to explain why I believe, this is a theory, but this is why I believe it. If you go to a hospital, for a regular checkup and it's not that serious, nobody panics, right? But if you break your leg and your mom's there and she's like, what the heck? You broke your leg, and they take you to the emergency room, that's when people start to panic, right? So when the Federal Reserve prints money, that is a big, big red flag for a lot of people with wealth and these big institutions. Why? The Federal Reserve doesn't just print money. It's very uncommon. As you can see here, very, very uncommon. They don't want to do it. There's a lot of press release. There's a lot of consequences to printing money. You're essentially telling the entire world that you have power over everyone when you print money. So essentially, they look at how much minority there is of printing money. Look at the time periods. They try to get it over quick, right? So when you see that red, when the printing starts happening, everybody's freaking out and they're like, okay, what's going on with the economic system? Then the market falls. As the market falls, it causes this feedback loop where they're like, oh, wait, the market's falling. Let's print some more so that we can fix that. Like, let's print as much as we can. This is where we see the dark reds, right? So it starts off a little bit light red and then it gets darker because they're like, oh, I got to print as aggressively as possible because the entire stock market is falling. Everything's falling. All risk on assets are falling. Let's print way harder. Let's print way harder. And that's where you see the dark reds, right? And then that's where we see our bull run. That's where we see our all-out bull run. That's where we see everything go up. Why? Because as you can see in the white here, interest rates are at 0. That's actually a really, really good way to borrow money. At 0% interest, just take money from the government. It's free money. And over a long period of time, that's what brings us into a bull market. So there's like an initial panic. The entire market drops because everybody's like trying to figure out, is the Federal Reserve System broken? Like, is it broken this time? Like, you guys printed money. Is it broken this time? What's going to happen? And everybody's panicking. And then as it gets to the bottom and people get confidence, that's when we go into a full-on bull run. Now, hopefully that gives you confidence, because if you look at what's going on now, I don't see any red. There's no sign of red. They're continuous. I don't believe they think the system's going to break just yet. Now, the beautiful part about this indicator is when they start printing, then I'll know to get out of the market. This gives me so much comfort. This is why I went, this is one of the reasons why I went 50% of all my portfolio, because it's just so comforting. It's so consistent. It's extremely consistent, especially when you use risk management. These small dips don't mean nothing. These little small dips like that, they mean nothing, especially when you use risk management, which we'll talk about in future videos in this series. Risk management, I can lose 20 times if I set my actual portfolio up the right way. Not 20 times. I could lose 7 to 10 times, depending on how many losses I want. I could pick how many losses I'm going to have on my trade and still make money. So I can literally lose 7 times and still make money. That's what risk management does. So if you combine that with the overall trend and understanding where the overall trend is, it gives you confidence. So again, I believe all risk on assets are in an all-out bull run right now. That's what I believe. All risk on assets, all-out bull run. That's what I believe. I'm very confident in that. I'm looking at the S&P 500 as an indicator, but this moves Bitcoin almost identically, and this moves the altcoin that I purchased almost identical as well. So that's the first thing I want you guys to know. Now, the second thing I want you guys to know is the Bitcoin halving event. So the Bitcoin halving event is another thing that's giving me extreme confidence. It's another one that's giving me extreme confidence. Why? Because the Bitcoin halving is just right around the corner. We have less than a year to the Bitcoin halving. Now, these white lines that you guys see here, that's the Bitcoin halving event. Now, if you don't know what a blockchain is, essentially a blockchain is how cryptocurrencies operate. So I want you to imagine, a village and everybody has transactions. Everybody is buying and selling things. And there's one guy that's writing down every transaction. And he has this massive list, like a database, like an Excel spreadsheet. He has this massive list. That's essentially what a blockchain is with everybody's transactions all over the world. Every transaction that ever happens on a Bitcoin or whatever system, Ethereum system, that's what a blockchain is. So every so often, about 10 to 15 minutes, we have a confirmation on the block. So we have essentially someone writes, the computer writes a whole bunch of transactions, puts it in a block, right? The block goes through a system of checks, which the checks are not done by humans, actually done automatically with algorithms and cryptographic technology. It goes through a system of checks and is actually confirmed through proof of work or proof of stake, which is the consensus mechanism. For people that are new, essentially it's just code that checks the transactions to see if they're true. And the way that it checks is by miners on Bitcoin. Now, for the purposes of this video, we're going to talk about Bitcoin specifically, but for miners on Bitcoin, they actually dedicate their computers at the blockchain to confirm it. So they essentially point their computers with the code at the blockchain and they confirm it every 10 to 15 minutes. It's all random because the way Bitcoin works is it's a random lottery. It's a lottery of people. Everyone's pointing their computers at this blockchain to make sure that it's not fraudulent. Everyone's pointing their computers, and essentially there's a random lottery that picks one group of computers to win what? The actual reward, the Bitcoin reward. And this is where you get inflation. So the Federal Reserve, it's not actual inflation, it's just distribution of new Bitcoin. The reason why it's not, I'm not going to go into that. That's a little bit too deep. But inflation is when there's no end to the monetary supply and they're just printing at will, similar to the Federal Reserve. That's inflation. There's just no end. We know with Bitcoin, it's automatically coded in that there's only 21 million in existence. But the question is, when does that 21 million come out? And that's what we have here. So as you can see from the first halving, there's 50 Bitcoin that came out every 10 to 15 minutes when they confirmed the block. So when the block was confirmed by the random computers that are pointed at it, and they're like, okay, those transactions are good. Those transactions, they're straight. They're not fraudulent. The computer confirmed it through cryptographic technology. This is actually the big innovation behind blockchain, is that you don't need a human to check it. You don't need anyone to check it. It automatically gets checked and it's all anonymous. It's crazy. That's actually the big innovation. And this is what they took for every other cryptocurrency. But essentially they point the computers. They're like, okay, you're good. Confirmation, block gets confirmed. Then the actual blockchain spits out a certain amount of Bitcoin and gives it to the person as a reward for dedicating their computer. Similar to if you're a miner and you're mining gold, this is why they call it mining. If you're mining gold and you find gold and you get gold, you have just increased the gold supply. You have just increased this gold supply by finding new gold. And then guess what? You got rewarded. You get to spend that somewhere and actually cash it out for cash. It's the same thing. So in the 2012 halving, there was 50 Bitcoin that came out. Then there was 25 Bitcoin after the second, and then there's 12.5. So they call it the halving for a reason. They cut it in half every single time. Every single time they cut this in half. So what does that mean? Well, that's scarcity. We know, you should know that scarcity increases the price of things. Demand and scarcity increase the price. What does that mean? So if you have Jordans, a lot of people like Jordans. There's a high demand for Jordans, right? High demand for Jordans. So if they had a drop and they put out 1,000 pairs of Jordans and it's super exclusive, there's only 1,000 pairs. And they're like, we're going to burn away 25% of it. They're going to burn away 250. The value of the Jordans would go up. This is scarcity. There's less. It's a high valued item. Cryptocurrency, Bitcoin specifically, is a high valued world currency that a lot of people want. So when we have this event where they're cutting in half how much Bitcoin comes out of the system, people tend to buy it like crazy. They're buying it like crazy and it goes into a full-on bull market. And it's so accurate. So we have two big things. We have the Federal Reserve that's looking bullish. This looks bullish to me because they're not printing any money. And then we have the Bitcoin halving, which is we're so close to the halving. And typically every single time we're this close to the halving, we go into a full-on bull run. Now, that is two big reasons why I believe, if we go back to the original side, that if you seek the market trend, which is the first thing, this is super important. Why? Because if you get this part wrong, then everything else is wrong. But this is why it's super important. I'm really doubling down and seeking the market trend and letting you guys know that I believe the market trend is bullish. I believe the market trend is bullish. So we pretty much ironed that out, like extremely detailed. I believe we're bullish for so many different reasons, but those are the two biggest reasons. And I believe it's worth it. This is why I put 50% of all of my income to buy altcoins. I've already bought the altcoins. Now, the second part here, which is monitor liquidity, in the next video, we're going to dive into, okay, so this is how it goes, right? So you have Bitcoin at the top. I don't buy Bitcoin. I use it as an indicator because they have the Bitcoin halving event and it's beautiful for a chart perspective. I don't buy Bitcoin. Bitcoin moves the price of Ethereum. Now, if you understand what Ethereum is, it's a smart contract platform. It's for smart contracts. Essentially, it's like an operating system. So the best way I can explain this is, let's say hypothetically, we have the BIOS of a computer, which is the primal coding language. I know you guys seen it before. Sometimes you start up a computer, there's a little lag, and you see this code box. There's actually code on your computer that you never see that actually runs it. It's like, it basically interacts with the hardware of your computer. And it's just like a very primal coding language. So you have that coding language, okay? That to me is like Ethereum. Ethereum, I don't buy it, but right now it's being used on that level where a whole bunch of projects are essentially connecting to it to use it for liquidity, infrastructure, projects. Ethereum has everything. It has won the battle of the layer ones. So this is why we call it a layer one, and it won everything. So what happens is we have another coin, which we talked about in the last video, Arbitrum. Arbitrum connects to Ethereum, which is like the operating system. This is like Windows or Mac, right? It connects to, so when you boot up your computer, you see the BIOS a little bit, maybe, not all the time, but you see the BIOS, then it goes into Windows or Mac. That is what Arbitrum is. So Arbitrum is not the coin I'm buying. I might do some high-level DeFi stuff with Arbitrum token to buy the other token that we're talking about. But I want to know what operating system my 100x altcoin is going to be on. So the actual application on the Windows computer would be considered the 100x altcoin. So you have the BIOS, which is like the primal thing that I wouldn't touch with a 10-foot pole because there's not enough money in it. Ethereum will maybe 3 to 5x, maybe. I use it for practical use only, for liquidity and things of that nature. But we have Arbitrum, which will probably do well. It'll probably do like a 10 to 20x, maybe. And it will do well. Maybe I might buy some Arbitrum. But there's apps on Arbitrum. There's coins on Arbitrum that I believe will 100x. That's how this is getting broken down. So if you see what I did, I'm really dissecting it to where there's no thought that's stopping you from getting involved with cryptocurrency. That's what I want to do. And that's what the next video is going to be about. I'm going to look for liquidity. And the importance of liquidity is, it's the most important variable out of any crypto. If there's a Windows software, and this is financial asset classes, remember, it's a little bit different from Windows. But if there's a Windows software and there's no apps, on Windows, why would anyone adopt Windows? It's the same thing with liquidity. If there's no liquidity on the operating system, or in this case, on Arbitrum, we call it a layer 2. On the layer 2, if there's no liquidity, then the apps are not going to do well in numbers. The actual coins need liquidity. Liquidity is everything. So what you need to find is low liquid protocols that have a chance to be highly liquid. Now, by liquidity, it basically just means, very simply put, liquidity means that how much money is invested into the protocol. So not the price, but how much money is readily available in the protocol. So there's these pools of money, and this is diving a little bit deep, but there's these pools of money that are used to actually swap the coin when you want to buy it. So if you go to Uniswap or SushiSwap, which is an actual exchange, and you want to buy Arbitrum, then there's a pool of money where a whole bunch of people have allocated money to it, where they allow you to take their token. And this is what liquidity is. We need liquidity for the 100x altcoins. That's what we really need. So next video, we're going to dissect Arbitrum on a level you've probably never ever seen on the entire internet. It's going to get very deep. And then after that, we should be able to get into the altcoin fundamental analysis. Then we talk about the actual strategy, and then we're going to go into tracking the trade. So again, this is a long video series, but I want to really dissect it in a way you've probably never seen before so that you guys are educated on a level you've never been before. I'm taking this as serious as I possibly can so you can see I'm a professional. If you want to get all of my trading tools, everything I do, all of my practices, 50% off, CoinPix Inner Circle, head on over to the website, CoinPix Inner Circle. I've already given out the altcoin. I've already given my explanation why over the past, I've been talking about this altcoin for almost a month. So it's vetted to an extremely high degree. I spent a lot of time, a lot of research. It's not just an impulse buy. I've been looking at this coin for a very long time. And a sneak preview is that there's some big whales, some people with extreme credibility that are in this token, like extreme credibility. And the use case of this token, I believe, is unmatched. And it's crazy. So Head on over to CoinPix Inner Circle to get that now, or just wait for the video series. We're coming out soon. That's pretty much it for this video. Just to give you a recap, we went over how the Federal Reserve controls the entire asset market and everything, all risk on assets, and how they give us pretty much a clear indicator to the bullish direction of the market right now. Then we went over specifically the Bitcoin halving and how this also gives us a clear direction in the cryptocurrency specific market. We talked about liquidity. We talked about the applications and where we're going to move into and where we're going to research so we actually buy our 100x altcoin. If you like the quality of this content, hit like. If you don't, leave some constructive criticism, subscribe for more video updates. And like I always say, if you don't get with it, you will get left behind. Thanks for watching this video, guys. Catch you later.